You know, we spend much time here talking about the economy and the likely impact on interest rates. Well, another key piece of information, which is closely watched by the Reserve Bank, is business confidence and business conditions. The National Australia Bank released the latest data today, which points to ongoing economic weakness. Alan Oster is the NAB's chief economist and joins me now. Alan, look, I've been through this. It looks pretty dire, I've got to tell you, out there.
It's tough. So what we're seeing is activity is not getting any further momentum. In fact, it's sort of a little bit weaker in the June quarter than it was in the March quarter. Confidence is sort of significantly negative, and forward orders has been negative for a while. And in some areas like retail in particular, some really serious negatives there.
So just let's take it back and unpick, because we saw the national accounts last week. Economic growth was 0.1%, so it's barely above water. So this June quarter we're about to go into, the one that we're living in right now out until June 30, it seems as though nothing has changed. If anything, things have deteriorated.
Yeah, well, I think that's right. And so, you know, we've got a forecast of a 0.1 again for June quarter. So, you know, who knows? And, you know, you can always say, what will the statistician do? But I think ultimately what we're saying is there's no pickup in growth that we've seen yet. We expect that it'll get better in the second half of the year when you get tax cuts, some fiscal policy and inflation lower. But, you know, the reality is a lot of stress out there, not just in the mortgage market, but also essentially at the bottom end of the income distribution.
And yet there is some signs that prices and costs continue to rise. And so that's also telling, because you've suddenly got a situation where the pressure is not coming off inflation. So therefore it's giving no evidence for the Reserve Bank to cut interest rates. Yet the conditions, as you say, are atrocious and probably justify a rate cut ASAP.
Well, I think you've got to be careful on monthly data. You're right. All our wage price series went up rather than down. They went down for the last couple of months. So I'd say what the Reserve Bank would look at when they see this survey is essentially there's no growth momentum at all. They didn't expect that, you know, inflation would continuously go down. And I think you really got to say, well, you know, if there's no growth, eventually wage and price pressures will come down. So I think you've got to be a little bit forward-looking. But, you know, I would expect the RBA next week will say, well, we're not ruling anything in, we're not ruling anything out. We sort of thought about whether we'd cut, or whether we just stay on hold, or whether we'd increase. But I think reality is they're basically just sitting and waiting. And they won't see the full inflation story until they get the quarterly CPI, which is July. So that's quite a while away.
But then isn't there a danger that when, OK, the government, yes, as cost of living relief takes pressure off the headline inflation rate, but the Reserve Bank looks at the underlying inflation rate, we know that. Right. And then the second factor is that if the people go and spend the money, which you imagine that they will because they're suffering the pressure, that it actually could raise prices, raise the inflation rate.
Well, I think you need to be careful, because we did a survey of about 4,000 consumers. And basically 60% of them or more said they'd either save the money or they'd pay off debt. So I don't think all of the increase in the tax cuts or the reductions in tax cuts are going to be passed through. So I think it's hopefully what you'll see is a better growth momentum in the second half of the year. But let's be honest, if you've got a couple of 0.1s and then you've got a couple of 0.5s, you're only talking, you know, 1.3 through the year, which is well and truly below where you'd like to be. And that's why we think unemployment will continue to go up. Now, we'll still see jobs being created, but not enough to make the unemployment rate stay where it is.
Alan Oster, always good to have you in the program. Many thanks for your time today.
Thanks, Ross.